Hi, Humble Nation, and welcome to a Saturday edition of Money and Politics. And we're going to be talking a bit about the stock price, and it's been a disappointment for a lot of us over the last 5 weeks or so, maybe 6 weeks. We see here a 3 month chart of Humbl, and as we can see, back on February 8th, we hit the high, which was there's $6.84, and we went through the whole process of the split. And as we come to today, April the 10th, we are just below $3 a share. Now, on one hand, that's a good buying opportunity. And the other thing I would point out too, folks, notice the volume here on the bottom, the red and green stripes. The green is volume on up days, the red is volume on down days. Look how much more volume traded there was. And of course, that's before the split. And then it got to be more expensive, which was the very purpose of having, or one of the main purposes of having the split, was to cut down on all of these stock traders going in and buying 1 million shares at a time and all. But my point would be, while the stock is down, we're down on low volume. So that means that we're not selling willy-nilly. It's not like everyone is fleeing the stock. But nonetheless, at $2.95, it's been disappointing. It seems like every time we go up a bit, as we see on the rise here, then we go down. And that despite the fact that we've had a number of things happen we thought was going to be bringing our stock price up. We have our own ticker symbol. We've had tickery, and we have now the ETX is being traded. So the other day I was talking about this with my son Thomas, and he has been following the OTC actually in some ways longer than I have, because I was never much of a trader on the OTC. So Tom, if you're ready to join, we'll be coming to you. And Thomas, the other day we were talking about this and was giving me his opinion as to why the stock price was down. I thought it was pretty interesting, so I wanted to share it with you. With that, Tom, give us your rendition of why the price of Humbl is continuing to go down. It goes at $3, it runs up to $3.70 or so, and then it goes back down. Why is that happening in your estimation?
You had called me the other day and you were telling me about something that was happening with INND. And then on the phone, you had said, and Humbl is drifting. The price is drifting down and I don't get it. And I said, well, it makes sense to me. You and I and many of those who are probably watching this channel, we bought Humbl stock in January. We bought Humbl stock in February. We bought it in March. We have our shares. We have our money that we're happy with invested in. And we're now ready to wait for the stock to go. We're ready for the company to build. We don't really worry about the day-to-day action. So my cost average is $3. When the stock goes beyond 3 and I'm making money, hey, that's great. That's fantastic. But I'm not going to buy at $3.50 and I'm not going to buy at $4. And I think a lot of the longs feel the same because we were buying at previous times and previous prices. So when the stock goes from $2.50, $2.60 a few weeks ago, when I was buying again at those prices and it goes up to $4, that's fantastic. But I'm not buying anymore. You're probably not buying anymore. I don't know that any of those buying in January, February, March are buying anymore. So the stock price has to rely on new investors to get in and keep that price going. Well, we're not getting new investors. Not now. That will come eventually. But we don't have new investors because Humbl is no longer the hot stock that it was back in early February, when everybody on the OTC market, investors who, they're tending to look more for quick profits, and you showed it on the volume bar. This was just green, and everyone's talking about it. All the YouTube stock bros and laptop legend, and everyone's getting in. But then you don't stay hot forever. So the longs don't care because, hey, we're in for the company, not to go to the moon in about 5 seconds. But there's not an influx of new investors coming in yet that can keep the price, let's say, above, going to 4 and whatnot. And on top of that, folks like me with a cost average of $3, I don't care if the stock price goes below $3. That's fantastic because then I get to buy more shares at a cheaper price. So there's a base of people, and you saw it yesterday on Friday. The stock has been drifting down and down. And then when it goes below $3, buying kicks in because that's when you get to the longs who are in under that $3 cost average. So it hit 290, 291, and I was able to buy some at 291. And then it went up to $3.15 and it fell down to $2.96. But that base of support is there below $3. But the base isn't going to buy at $3.50 or $3.70. We're not going to buy at $4. We're happy to wait and watch, our portfolios go green. So we're kind of just stuck right now where we're not attracting new investors. And one of the reasons we're not attracting new investors is because we're on the OTC. We're on the penny stock exchange. But Humbl isn't a penny stock anymore. Not a literal, it's not a penny stock anymore. So penny stock investors, people who are looking to get money, they'll go into INND, which you mentioned. They were going to HCMC. They're going to, what is it, LTNC, or, some of these things. They're not going to buy a stock that has a price of $3 or $4. They don't buy those stocks. And the people that would buy those stocks, people that typically invest in Nasdaq, like an investor like you, let's say, you don't look to the OTC for stock ideas. So right now, we're just kind of stuck temporarily with longs who believe in the company and really don't need to buy anymore. We're happy. We will buy when the price goes down below our cost average, but our cost average isn't at $3.50. It's not at $4, and we're not getting new investors in.
Yeah, I think
that will change.
I think a couple of things, and you hit on them. As one, I have often said I'm not a penny stock investor, or haven't been historically, and so you're right. I'm looking at bigger dollar price, higher price stocks, more secure stocks. Now, you're also right in that Humbl is no longer a penny stock. It was when it was 20 cents in January, but now after the split, first of all, the price isn't in pennies; it's roughly $3, and the capitalization of the company, it's at $3. Let's just say the stock price is $3 with now 1 billion shares outstanding. You got a $3 billion market cap. That also doesn't qualify it as a penny stock. So, and it's really kind of in a limbo. It's still on the OTC. At some point, I think it'll be uplisted, more than likely to the Nasdaq, probably late this year or early in next year, depending upon how the stock price moves and other things. And as I say too, I think there's just so many people, as much as we talk about Humbl, as much excitement as there is in what I call Humbl Nation, there's still a lot of people who just haven't heard about Humbl, and you have all the big dollars, the pension funds, the money managers. They're just not going to go in and necessarily buy it just yet. It doesn't have enough financial history. We haven't even had the first quarterly earnings report yet. And so that's really, I think, the combination of why this stock is being held down. And I thought your analysis was pretty good, that this goes to where, as you say, we used to be a penny stock and people would buy and sell, and now we're kind of betwixt and between. It's almost like the teenage years. You're no longer a kid, but you're not an adult either, if that's an apt analogy.
fairly, and I wanted to, comment is, and I do want people to remember this. As much as you and I talk about Humbl, the people that watch your channel, or you're on StockTwits, or you're on Yahoo Finance, when we're talking to one another, we kind of get this feeling you can that, well, everyone knows about Humbl, and the truth is, no one knows about Humbl. Nobody knows about Humbl, and I want people to remember that, because I think the other thing that can hold back the stock price is people developing unrealistic expectations about certain things that should happen. And I'll give an example. I think it was a couple of weekends ago. There was a Forbes article that came out, and it featured Brian Foote. It wasn't about Brian Foote. It wasn't about Humbl. It was about NFTs, non-fungible tokens, and how they would be used in fashion. And the article quoted Brian Foote. There was about 7 sentences, 10 sentences. And I saw people online go, well, this is huge. This stock's going to go up 10% on Monday. And I thought, well, that's silly. I mean, maybe it'll go up 1% to 2%. Maybe that's a little catalyst, nothing big. And it turns out the stock, not only did it not go up, it went down. And people see this and they go, well, this just doesn't make sense. We must be being manipulated. We must be being scammed. There's hedge funds shorting us. And there's all this negativity. And the truth of the matter is, you got featured in an article in Forbes. It wasn't the front page of the New York Times or Washington Post. It's Forbes. It's on a weekend. And here's the thing. The people that read Forbes don't buy OTC stocks. And the people that buy OTC stocks don't read Forbes. So exposure is good, press is good, but you need to remember, one, most people don't know about you. Two, where are we? We're on the OTC. There's no hedge funds buying. There's no mutual funds buying. There's no Terry Martin types that used to buy. There's no Kathy Wood. There are no Robin Hooders. There are no Webullers. It's just us right now. And so when people realize that or recognize that, I think it's like, it's okay that we're not going to the moon yet. We really shouldn't be expecting to go to the moon. Don't compare Humbl on the OTC to stocks that are on Nasdaq. When TCAT goes from $3 to $74 in 2 weeks, 3 weeks, and people go, that could be us. Yeah, if we were on Nasdaq, you need Nasdaq to make that happen. It's if I say you told me you're going to drive from St. Louis to Chicago. And I say, well, you do. And it took you 5 hours. And then I think me going from St. Louis to Chicago is also going to take 5 hours. No, you took a car. I'm riding a bicycle. You're on the highway. I'm taking backcountry roads. It's not the same. And until you get the car and you're on the highway, you're not going to be able to move at those speeds. And that's the limitation of the OTC. But let's remember, that's also why Brian Foote went to the OTC. He wanted you, me, those watching this, to buy shares at a cheap price. Instead of going an IPO on NASDAQ, he chose the OTC route. In exchange, there's a deal made. We could go IPO, and we could IPO at I'm making up a number. Let's say it's $15. And for us to go to $15 to $20, that could take a month. But you would have to buy shares at $15. Here's the deal. Instead of doing that, I'll let you buy shares, like when I was doing it first, 20 cents, 9 cents, $1.63. And now around $3. But in exchange, it's going to take longer for us to get to $15 and then $20. But when we do that, you won't have been buying at $15 and going to $20. You'll have a cost average of 2 or 3. So in exchange for it taking more time for there to be the price action, we get to buy shares. So let's remember not only that we are on the OTC, let's remember why we're on the OTC. It's not going to go as fast as stocks do on NASDAQ. We're not a penny stock on the OTC anymore. It's a $3 stock. That kind of movement just isn't going to happen. We will attract new investors. We got to get an app out. We got to get the finances out. Let Tickery do its thing. Let's open up the country. Let's open up the world. Nobody knows about you yet, and that's okay. But remember that nobody knows about Humbl. You're under the radar. You get your shares very cheap, but it also means the stock isn't going to go on any insane runs. Certainly, I don't think in the near future. That's in the past. That's when it was a penny stock. So let's just kind of remember where we are.
And I think you made a couple of quick points, and we'll not go too much longer. But one of the things that you were saying, I mean, this was the purpose of Brian Foote bringing it out the way he did through the SPAC. And folks, you were disappointed by the reverse split, but you wouldn't have been able to buy, 100, 200, 300,000 shares, as many of you did, and more. Some of you having 1 million shares. You couldn't have done that if Humbl had come out, as Tom said, through the IPO method. You never would have been in that position. Even with a 4-to-1 reverse split, if you had 100,000 shares, you still got 25,000, which is probably still a lot more than you would have had if we had come out at $15 a share. And as Thomas says, we think, because we tend to be singing to the choir, so to speak, I talk about Humbl almost every day. I would say every day. Sometimes I may not emphasize it, and I talk about other things. But we got to remember that a great number of people across, you walk down the street and people ask anyone if they heard of Humbl stock. No. Have they heard of IBM? Yeah. Have they heard of Cisco? Yeah. But they haven't heard of Humbl. And instead of it being a cause for heartburn, I would tell you it's one of the things that can make you rich, because if you knew where gold was and other people didn't know where gold was in a stream, wouldn't that be good? You would know where the gold is and they don't. That's the case right now with Humbl. We've had all these developments. As I was talking to Scott yesterday from Atlanta, and we were talking about Tickery in a $100 billion industry. If they get 1%, they'll go up to $1 billion in revenue. I think they're already a $100 million company. And now we have the ETXs that are only a week old. And we are going to have the app, as Tom just said, coming out any day. So we have a series of catalysts that I would say will take us further throughout the course of this year. Let me ask you, Tom, what do you think, given the argument you just made, would move the stock? When would we start to get the stock moving higher and consistently higher, to where we go past 4, past 5, past 6, and we don't, we're going to bounce, but we don't ever come back to the $3 or $3.50 level?
Yeah, I think it's just going to take an app release. It's when you have the physical thing in your hand and you can see it and you can show it to friends and family and it starts to be adopted, that's when I think you're going to start to see the price move up. But we have an ETX, that's fantastic, but that's a limited market. That's for those who are in cryptocurrency, and certainly you would need to know about Humbl. The app is really going to start benefiting more of Latin America, let's say, than perhaps America, with the money being exchanged. So you'll start to get numbers coming out about how many people are using it. Remember, certain portions of that app are going to be used here in America, but I'm not going to necessarily use the money transfer business. That's more for people in other countries, and it's to serve those markets where they're not being served by PayPal and Venmo. So we're going to get an app out, and yes, we see it. It's real. We're going to see the features. Does it look great? Does it work? And then maybe people are going to start investing. We also just got to get some numbers coming in. We got to know how many people use the ETX, how many people are using the app, what kind of money is Tickery getting in. I'm not expecting the stock is going to be $100 by the end of the year. I don't know that it's going to be $20, but I think it will be. It can certainly get closer to $10. But we just got to see some of these things come out. We're so in our infancy. Yeah. You don't even have your app out yet. And so that's what's it going to take? Well, we really haven't even started the business yet. Right. So that's like, just let the business get going, and then the stock.
We don't even have our first quarterly earnings report out yet. and we just got the ETXs. And I would argue the ETXs, and I think a lot of you viewers would agree with me. I think the ETXs came out much faster in America than I had expected them to. I thought that might have taken months longer than it did. And
I wrote that off as maybe not happening until next year. I was like, whatever.
Right.
I mean,
So
not going to happen. Regulations, Janet Yellen doesn't like crypto, whatever. That's not really the big part of the business. It's the app. So that's why they were like, oh, it's coming to America. I was like, dang, that was fast. So, they're moving at a good speed here.
Folks, when Tom and I get going here, we go longer. We're already 20 minutes in here, but
it doesn't feel like 20. I'm sorry.
I know when you're doing this, it goes by, it always seems like about 5 minutes. But I would say, while we're going to have our first quarter earnings coming out, I believe it's April 15th, or right around there. I'm going to say, the quarterly earnings that will just begin to give us some real insights will probably be the July reporting on the second quarter. Then we will have had at least 3 months on the ETXs. Then we will have had, maybe 5 or 6 months on Tickery. And as Scott wisely pointed out yesterday, we're coming out of a pandemic. So it's not like a lot of people are going to concerts right now. They have an artificial inhibitor on the ticket business right now for a lot of venues. So we get to July, we'll have the second quarter earnings. We will have had the app out. Humbl is incorporating the ETX trading platform on that app. And we'll have all the other lines of business that they're dealing with. So I think this hopefully for the viewers puts into context. I thought Tom, like I said, had he had a better feel and fingers on the pulse of the mindset of the OTC, where for me it's kind of a second language, you might say, because I'm more of a New York Stock Exchange, Nasdaq kind of a guy. Tom, before we close out, any last words?
Yeah, I just want to say I'm still very optimistic about the stock, and I'm now red in the stock. It's below $3. I'm not complaining. I'm not whining. It's an opportunity if you have money and it's below your cost average. I'm choosing to buy more. And if you don't, hey, that's fine. The stock will be fine. There's buying opportunities now, but company hasn't even taken off. So I would ignore bashers making ridiculous claims and know what you own. And I think we're in great hands with Brian Foote. We have a bright future to look forward to this year. Stay optimistic and,
Yeah, I would say
happy investing.
Right. And I would say
and happy Thanksgiving, everyone.
And in closing, the thing I would say, we started the channel for new investors, and new doesn't necessarily mean young. There's a lot of people who are 40, 50, even 60 years old, maybe who've never gotten into the market before. So you're welcome here. The channel is designed for you here. My dad talked to me. Thomas, you can see, is a young guy. He knows what he knows because he was raised by a dad who talked about investing. His mother was an investor, so this wasn't foreign to him. And this is the kind of thing that we want to pass along. So if you're 40 or 50 years old, not only is it for you, when you get started, it's also, don't forget about your kids and introducing them so that when they grow up, they know how to grow their wealth. They know that they can participate not only in the growth of the American economy, but in the growth of the world economy. So I'll leave it there, folks. I hope you're having a great weekend. And we'll see you certainly, probably not tomorrow, but we'll see you on Monday. In the meantime, have a great weekend. And Tom, thanks for joining us. And in the meantime,
thank you for having me.
Good investing, everyone. And don't forget to share the video with others so they get involved. And we will see you Monday.